Hello and welcome. We have Mr. Devansh Jain, the Executive Director of Inox Wind in Focus. Hello and welcome, Mr. Devansh Jain.
Hi, good afternoon. Pleasure to be with you.
Hi. So quite a stellar quarter for you. You finally turned profitable. If you had to look at Inox Wind with a net profit of about 1.81 crore, can you just share your progress on that front? And are we going to sustain the profitability that we have shown over this quarter?
No, certainly. I mean, it's been a milestone quarter for us where we've turned PAT positive. More importantly, I think we've been saying this for the past 3 quarters. We in Q1 we turned EBITDA positive. In Q2 we turned cash PAT positive. In Q3 we've become net profit positive. And I think we've said as tailwinds are there in the sector and the whole sector's coming back after a deep slumber or a very painful transition pain of the past 5 years. I think we are primed for very significant growth and significant profitability as we keep moving forward. So I think this is just the beginning. The quarterly EBITDA was close to about 100 crores. We've raised significant amount of capital over the past 6 months. We raised 800 crores from marquee institutional investors to pair of debt. Prior to that, the promoters had pumped in about 600 odd crores, and then we'd raised another 500 odd crores. I think what's going to happen is over the next 3 to 6 months, our interest cost is going to become zero. Number one, as we become net debt free. And number two, as the sector takes off now, and as our order book, which is very large, one of the largest in the sector now, and as we ramp up more and more supplies, I think you're going to see a significant churn in terms of the profitability ramping up substantially.
Absolutely. So you mentioned about the large order book that you have placed. Just again, giving you a highlight of the quarter, the 1,500 megawatt wind capacity order that we have received from CESC. Can you just share the executive timeline for this order and how we would recognize the revenue? So the progress on that front.
Look, over the course of the past few months, we've added close to about 1850 megawatts of orders, and we're in advanced stages of closure with multiple IPP players and C&I players. Over and above that, we've bid in multiple PSU tenders. So I think we expect a very, very significant amount of our order inflows to add to the already very large order book. Having said that, I mean, it's a matter of great pride for us. Recently, just last week, we announced India's largest ever wind order, which was a 1,500 megawatt order from CESC. So it's broken into two parts. So we're doing 1,000 megawatts of turnkey order execution for them and 500 megawatts of equipment supply for them. Thumb rule, a turnkey order is about 7.5 to 8 crores a megawatt. And blended, I think this 1,500 megawatt order, which we would kind of execute and supply over the next 3 to 4 years, would be about, in broad numbers, would be about 11,000 crores in order value.
So now with this order, we have a net order book of about 2,500 megawatts with another launch line pipeline of about big orders coming from the PSU side with NTPC and SEI, CI in focus. But now I want to focus on the private side. What kind of orders are we looking forward from this side? So can you share your outlook based on this?
Look, as I mentioned, I think we're in advanced stages of closure across multiple private sector enterprises who are both IPPs and C&I players. And I think it's a very, very robust outlook across PSUs and private sector players. If you look at our order book today, out of the 2,600 odd megawatt, excluding LOIs, our public sector share would be about 30%, and 70% is private sector across utilities, IPPs, and C&I players. So I think in the near future, you should be hearing significant other announcements from us on the order inflow side.
Right. Again, on this order book itself, I have another follow-up. Over here, we had earlier guided for about 600 megawatt of addition, but now with this big order in place, do we see a revised kind of an outlook, especially going forward to FY25 as well? So just some progress and what kind of order are we looking forward to next year? So timeline would be great.
Look, I think what we've done in the public domain post our quarterly results, and I wouldn't like to get into specific numbers, but all I can say is that we have all the building blocks in place now which have geared us to deliver gigawatt scale annual execution. And we are gearing ourselves to be a 2 gigawatt player in the Indian market in times to come. So I think, yes, qualitatively, we should be beating market expectations by a wide margin. I won't get into specific numbers, but yes, we would expect very, very significant uh, ramp up in operations as we move forward.
Right. Now coming to the new introduction of the 4 megawatt series that we have made in the wind turbine generators, you have in your earlier conference did specify that the 3 megawatt continues to remain a focus. But now with this addition, how do we see our margins looking forward, or what kind of growth do we look with the introduction of this new series in picture?
Look, first and foremost, I think what's important to note is our 3.3 megawatt has just recently been impaneled in the RLMM, right? So now we are starting commercial supplies and significantly ramping up that. 3 megawatt platform is going to remain the workhorse for us for the next couple of years. What we wanted to do was looking at the 10-year landscape of wind in India, we wanted to be future ready from the technology perspective. And to that extent, we tied up for the 4X platform. The 3 megawatt has a 146 rotor diameter. Eventually, we will launch larger rotor diameters on this. The 4X platform will have a 170 plus rotor diameter. Now, that turbine logistically can be transported only to very select parts of the country. So it's going to be a part of our strategy as we move forward, but a limited part of our strategy. And I think what we wanted to do as leaders in the wind energy market in India, we wanted to be spread across all possible market opportunities and state opportunities. And I think with this, we've tick marked the technology box for the next decade or so at least. In terms of margins, until 2017, when the sector was doing very well, we typically used to be at about 14 to 15% EBIT margins. And I think we've gone on record where we're saying FY25 and onwards, we are aiming to get back to our historical EBITDA margin.
Great. So now coming to Inox Green, here we have quite some strong trajectory with the aim to double the OM portfolio from the current 3.2 megawatt to 6 megawatt. So can you share what kind of growth steps are we making, and like the progress that we are seeing on that front to execute this big orders?
Look, I think we're looking at massive growth. I think it's a lovely business. It's a annuity business, uh, very high growth annuity business without any debt, right? We've cleaned up that balance sheet. We're virtually net debt free in that entity, throws up a lot of cash. And I think, yes, we've gone on record where we've said publicly that by FY26, we want to make this a 6 gigawatt platform. The vision is we make this a 10 gigawatt platform over the next few years. Having said that, as Inox Wind order book increases, and given the massive traction the wind sector is seeing and Inox Wind is seeing, I think organically itself, we should be adding significantly. We've acquired one fairly large unorganized player, iFox, which we continue to ramp up. Recently, we acquired a small niche engineering company to develop more capabilities for engineering for third-party O&M or wind turbines. We are evaluating multiple opportunities at this point in time, and hopefully we should come back to the market with some news on that once we are ready to announce something. But I think, yes, we're looking at very significant opportunities organically and inorganically as well.
Right. So now on to the last question. I do want to ask you about the one of the key goals that you have mentioned is the net debt-free status that we are seeing from FY25. So with that in on one side and the capex requirements, like now since we have such a long order pipeline, so how are we going to maintain this mix between the two? Can you just share some of your outlook based on the same?
Okay, look, first and foremost, if you go back about a year ago, we were carrying interest-bearing debt and advances of close to 3,000 crores. That is now down to about 500 odd crores. And I think over the next 1 to 2 quarters, we should be net debt free, number one. Number two, as the business ramps up and very profitably, I think we're looking at a scenario where we're looking at very, very large free cash flows. So ramping up the business does not require capex. We have no I mean, our capex requirements are roughly 50 to 70 crores in a year. That's it. And that's primarily to add new molds for the 3 megawatt platform. We don't need any other capex. Our manufacturing capacity is already in position to be able to take care of virtually 2.5 gigawatts per annum. So we have no significant capex programs. On the contrary, we are looking at a scenario where we start throwing up significantly free cash flow and add or start running treasury operations and have a dividend policy eventually in place once approved by the board.
Right, absolutely. And anything that you would like to highlight in terms of guidance for next year?
Look, I think not specifically guidance, but I would just say that I think we've got all the four key building blocks in place now for massive growth, particularly at Inox Wind. And the four are namely, we've got a strong balance sheet, very strong promoter backing. We're A-rated, the promoters were about 53%, probably the highest across any other Indian player. Two, we've got a very large and diversified order book, which continues to increase. Thirdly, we've got a very high value project development pipeline. I think we're the largest turnkey wind turbine company in the country today, and I think that's a very large advantage. We have plug and play infrastructure available, which others don't. They're struggling, and I think that's a key mode for us and will continue to be a key advantage for us as we move forward. And fourthly, we've tied up technology for the next decade, so we're future ready. And I think with these four building blocks in place, as I mentioned, Inox Wind is ready for a gigawatt scale execution, and we're gearing ourselves to be a 2 gigawatt player in the Indian market over the next couple of years.
Absolutely. Well, thank you so much for sharing your outlook on Inox Wind, and all the best for your future performance.
Thank you. It was a pleasure to be with you.